Hello, welcome. I'm Nataraja. This is the weekly top 50 mutual funds analysis, and this particular report is very important. So you would appreciate attending this session. This session is coming a bit late, at least by a day, because I have been busy. However, this report is important. So let us get on with the report. Let me explain why this report is important. As you can notice, this is for the week ending on September 20th, 24, and today is September 24th. So basically week ends on a Friday. So today is a Tuesday. And the fact that this report is coming at least by a day late is a good news. Let me explain what happened. Wednesday night, that is Wednesday daytime in the US Fed reduced the interest rate by 50 basis points, which is a significant reduction. Now, we have already anticipated a positive response by the market for equity on such news. However, nothing much happened in the Indian equity market on Thursday. The reason being, this is my guess, is that it is a corporate culture. They need at least one day for making meetings and then sending the notice as to what are the action items. So Thursday, the big wigs kind of took a break that way, and the retail people always are a bit like sheep; they follow. So the Indian stock market was struggling on Thursday in spite of a great news on Wednesday night that came. However, come Friday, there has been a frenzy. The entire market got into bullish nature, especially the financial institutions, because the FIIs have come in and they're buying left and right, even in the cash segment. And when FIIs buy in frenzy, they go for financial sector. Now, if you notice this week's summary, probably you will not see a greater numbers on the financial sector funds simply because they have been lagging, they have been underperforming. So they are just recovering is what you would see. So whatever leadership you are seeing in this week could be short-lived. I personally am not making any investment based on this report simply because I know that next week's report is going to be entirely different. At summary level, definitely it will have different, better numbers, but the leadership within the equity and potentially with some impact on the hybrid also, we will see potentially different leadership, which would be a new trend setter because this bull run could run at least for a month and potentially for 2 months because the festival season is ahead. So we have been looking at subdued mutual fund numbers. Though they are subdued, they have been very impressive compared to international standards. You, in the coming days, will see better numbers, which means whatever mutual funds you are holding, they will give better returns. And whatever you are going to buy, there will be better recommendations here and they will give good returns. So with that, let me come to the summary story of last week's. Last week was a good week overall because of the Friday's bull run. The numbers became better than previous week. And let us see how it is. The monthly top 50 gave a monthly return of 8.37%, and annual top 50 gave an annual return of 67.23%. Entire in equity mutual fund in US, which is 906 funds, became 0.76 better for the week, 3.64% better for the month, and 41.74% for the year. See, look at the good news here. If you take the average of all 906 funds, you are making 41.74% annually based on the last week's mutual fund. So you will see a better number here in the coming week. Okay, so that is the story here. Now, one more information I would like to give here is top 50 equal equity funds average based on 1 year return improved only 2.05% for the month compared to the entire equity fund universe gave 3.64%. Why the annual leaders gave less? Because they are still correcting as on last week. It is important to see in the next week's report whether this trend will change. This trend can change next week if the annual top 50 leaders are getting help significantly from the bull run that is happening this week. So that is to reconfirm in the next week's report. Hybrid funds, usual numbers, decent numbers. See, hybrid annual average top 50 is 35.61. All hybrid funds average is 22.74. As you know that my hybrid funds uh, report is for top 50, therefore only aggressive hybrid funds will appear. For those who are interested in conservative hybrid funds, I would typically generate a detailed report at least once in 2 months. This month I'm busy, so I'm skipping this month. So after October 5th, whichever weekend comes, I will generate a detailed report for hybrid fund. And a week after that, I will do a detailed report for a debt fund. And then it will be time for another detailed report for equity funds. And I would like to do such detailed reports only once a week because I'm busy and this is kind of a free affair. There is no commercial engagement here. So I don't want to get a heart attack by working too much. So with that, we'll get into debt mutual fund universe. Similar numbers, but these numbers may change because of the interest rate changes. So that's also curiosity for next week report. We will look very closely how these numbers might have changed. Then commodity funds got a huge breakthrough 2.19% for the week because when the interest rates fall, the commodities do get a bit interest. But there is a confusion within US whether the 50%, sorry, 50 basis point reduction in the interest rate is a sign of recession in the US or US we will swing back and show a better uh, economy and stock response. In that confusion, uh, there is a up and down movement, a kind of a sideways movement. It could be partly some kind of a manipulation at the higher levels uh, to to control the commodity prices. We don't know. We are all at a sheep level, and we do not need to know everything. We are now just looking at a quantitative analysis and sense what's happening. So I personally am staying neutral on the commodities because the commodity prices are artificially controlled internationally, and lot of things are artificially controlled globally. Otherwise, the sustainability and stability of human behavior is questionable. So I am not getting excited about whatever is happening in the commodity because I am totally focused on the equity, especially because my personal bet is next 2 months equities will do very well in India because it's all everybody agree that when US rates are cut, emerging economies will get a boost. The reason is so far you could you could get 5+% interest uh, in US. Now suddenly that interest rate is cut by 10%. So now the emerging economies will get better attention because the people who invest money in US treat emerging economies bit more risky. So now that risk will be more justified because the returns on emerging economies are better justified. That is the reason you see the FII money pouring in since Friday. It again got poured on Monday before this report happened. So with that kind of money coming, things will become frenzy here. Let us discuss at equity monthly top 50 again as a baseline because this top 50 will be very fiercely competed in the next report. And because the 4 days out of 5 last week was very subdued. So the natural trend leaders are still appearing here. If you remember, a week back, I did a detailed equity funds analysis, and we said consumer funds are ranked one, and that is reflected here also. You see a lot of consumer funds in the top 50, and I also bet that many of those consumer funds will disappear from the leadership within this list or entirely out of this list. And that is a curiosity we'll see next week. However, giving justice to what happened this week, the one in the green, mostly are consumer funds. And what is green? Green are those funds where the returns are above average within this list for all timelines from 1 month through 1 year. Okay. What is amber? Amber are those which are having above average return for all timelines from 1 month to 1 year, except for one timeline. It could be any timeline from 1 month to 1 year. Now, the green ones are definitely good bets for fresh investments. Amber ones also can be good bets for fresh investments if they have done well recently. Now, let me give an example. Sundaram Consumption Fund has given 9.58% for the month, 2.06% for the week. So it's a below average behavior came only in the annual basis for 44.71. So for a fresh investment, Sundaram Consumption Fund can be considered as good as a that is in green. So let us look at all the green ones. HSBC Consumption Fund, 10.86% for the month. Motilal Oswal Flexi Cap Fund, 9.48% for the month. Kotak Consumption Fund, 9.07% for the month. HDFC Non-Cyclical Consumer Fund, 8.67%. UTI India Consumer Fund, 8.51%. Grow Nifty Non-Cyclical Consumer Index Fund, 8.39%. And more than green, there are amber also. And another anticipation I am having next week is that when a financial sector stocks are becoming very bullish, we tend to see a lot of thematic funds getting better numbers, simply because certain thematic funds may be doing already better, and there's financial sector components also getting a push. We may see more such varied funds next week's report here. So you could see that some of the financial services numbers are already here. For example, ICICI Prudential Nifty Financial Services X-Bank ETF gave 10.33% return, but it is subpar in many other timelines. So therefore, it did not come. Now let us look at the top one here. DSP Banking and Financial Services Fund, which gave 7.76% for the week and 12.72% for the month, which is very impressive, but it did not get any color because all other timelines, 3 months and 6 months, are below par. So in this kind of a guaranteed bullish run, you may even consider those funds which are not even having any color. That is up to you. Let me highlight some other funds which have got more than 5% return this week. Baroda BNP Paribas Banking and Financials Funds, which is 6.87. Now imagine another 5% gain through this week. You will see a lot of banking, financial kind of funds in this list next week. So that's the reason I am not using this week's report for any fresh investments. I would rather wait for a week, reconfirm a new trend, and invest more next week. So that is something I already told you. Next is the monthly bottom 50. This is to recognize the bearish reversals. The bearish reversals are identified by looking at above average annual return within the list and below average returns within the week or month. So any fund with below average return for the week or the month, but having above average annual return is a bearish reversal. remember, because of the bull run that is happening since Friday through this week, this scenario also could change very much. So some of the funds which are showing a bearish reversal may reverse again. So that is the caution here. However, let us appreciate what the data has found for us. Some PSU funds are there. There are a lot of PSU funds here. Example, SBI PSU fund minus 5.03 return for the month. So they may do better. HDFC Defense Fund is stuck here, minus 3.66% with 84.19%. Probably it may not go below this. Got it now? Because of the bull run that's going on. LICMF Infrastructure Fund, Quant Mid Cap Fund, Quant Value Fund. These all may reverse the reversal. Let us see. So that's why this week's report is kind of very fleeting. So do not depend on it. Just appreciate its baseline value, and we will do the comparison next week as what changed. Now, equity annual 50, it is not a significant improvement here because these funds did not do that well compared to monthly top 50. And you can see on a weekly basis, one fund that got a better return is 1.55% by Kotak Nifty Alpha 50 ETF, but it is pretty low for the month. But it could garner the green status. The one in green are Bandhan Small Cap Fund, Invesco India Focused Fund, Motilal Oswal Mid Cap Fund, Motilal Oswal ELSS Tax Saver Fund, Franklin India Opportunities Fund, Kotak Nifty Alpha 50 ETF. Now, Bandhan Small Cap Fund, which has been a darling for the last 6 weeks or something, you can notice that has disappeared completely from the monthly top 50. So for me, therefore, it is in a hold status. It is no more an investment status. Probably it will remain in hold status because now it is going to face lot of competition from many other funds, especially leveraging financial sector. So this small cap, Bandhan Small Cap Fund may find it difficult to come in the top 50 again on the monthly basis. So however, one should appreciate that it has given you 77.40% being a small cap fund, which has a much lower ranking in general within the equity funds. So kudos to them because Bandhan Small Cap Fund shown very well when everybody else was struggling. And so we need to always keep an eye on that. And I'm still invested on that on a hold basis. Annual bottom 50 is to recognize bullish reversal on the underperforming funds. So that is done by recognizing above average weekly return or a monthly return, irrespective of the annual return. Now, let us look at some of the ones. 6.03 weekly return for Hang Seng Tech ETF. Okay, so there is a global recovery here. 4.06 weekly return for HSBC Brazil Fund. Then 3.56% for Invesco India, Invesco Pan European Equity EF, 3.21% for DSP Global Clean Energy Fund of Fund, Franklin India Feeder Templeton European Opportunities Fund, HFC Nifty Private Bank ETF. There are a lot of bank ETFs here in the bottom. There is a good chance that they all disappear from the list next week. Okay. So because many of them are already showing 3+% weekly return, imagine they get another 3% through this week. They will come out of this infamous list. So you will see some other things next week. So that is how we read this data and understand how the trends are changing. Next, we are coming to hybrid funds. It's the same old story. They are stable. They are a bit subpar compared to equity funds because of the good portion going to debt funds. So I will just read out what are in green. Invesco India Aggressive Hybrid Fund gave 6.55% for the month. SBI Magnum Children's Benefit Fund Investment Plan gave 5.39% for the month. Bandhan Hybrid Equity Fund gave 5.18% for the month. Bandhan BNP Paribas Retirement Fund gave 4.86% for the month. DSP Equity and Bond Fund gave 4.81% for the month. Axis Retirement Savings Fund Dynamic Plan gave 4.43% for the month. This is the monthly top 50, so you'll see again, there will be some change here also because of the equity portions chemistry changing. Hybrid annual top 50, the one in green are SBI Magnum Children's Benefit from Fund Investment Plan, 45.46% for the year. Axis Retirement Savings Fund Dynamic Plan, 45.83% for the year. Axis Retirement Savings Fund Aggressive Plan, 39.44% for the year. UTA Aggressive Hybrid Fund, 35.77% for the year. See, another observation I would like to put it out there is that when the market is in a very bullish mode, quant funds did very well. This may be a scenario, maybe around 8 months back, you reports if you see, there will be a dozen of quant funds in top 50. Then they disappeared, started disappearing and almost disappeared. Like in this list, if you see Quant Dynamic Asset Allocation Fund is in the top because still it has an annual return of 54%. But it doesn't get any color because it has below average return in all timelines from 1 month to 6 months. So then why 54%? This is the past glory that happened in the bullish period within that 1 year. Now the bullish time has returned. We will start seeing quant funds popping up more. So what it means is that one thing we learned is quant funds are very bullish during the bullish period, and they are going to be highly correcting uh, during the correction period. So that learning has come now by doing this report on a regular basis. So we will see more quant funds in the bullish period ahead. Now, lastly, we are coming to commodity monthly top 50. There is more stability now. Good weekly return. Top three funds gave more than 6% return for the week, which is ICICI Prudential Silver ETF, ICICI Prudential Silver ETF, FOF, Aditya Birla Sun Life Silver ETF, FOF. However, from a consistency basis, only one fund made it to green status, which is HDFC Silver ETF gave 4.5% for the month, 24.1% for the year. Then there are two amber UTA Silver ETF giving 4.49% for the month, but subdued for the 3 months basis. Edelweiss Gold and Silver ETF FOF 4.41% for the month, but subdued for the annual relatively. So with this, we have come to the end of this month's top 50 analysis. Usual disclaimers apply. This is neither a solicitation nor a recommendation for mutual funds. It's just insight based on the data that comes from value research. And that insight is very useful for me. I'm just sharing with you. Now you can look either my blog or my videos like this. Blogs come first, videos come 1 day or 2 days later on various platforms of social network of mine. So with that, I am ending this presentation. I am busy, so next week's report may come with a bit of delay, and I will see you next week. Have a good week because bull run is happening. Thank you. Bye.